You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, it's that time again. Time for the option block. All right, everybody, welcome to the show of shows. That is indeed the option block, everyone's favorite bi-weekly source for all things options related, a little bit of options wit, some wisdom, some analysis, some education, some unusual activity, bunch of your questions, throw it all together. You got the tasty stew that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. You guys know how to find us by now on all of the major platforms, including the easiest place to get all of it. You want to go, someone asked me the other day how to best go back to like the first shows on the network, way back in the dark days 11 years ago. I said, really, honestly, the easiest way to do that is our website or our mobile app. iTunes, a lot of the other platforms will limit you to maybe 50 or 100 back episodes. But go over to the network tab on our site or in the app and just scroll back a full 11 years, and you'll get there to the dark days of the show. Spoiler alert, it sounded a little bit different. It was pretty much just me for a long hours at a stretch, so it's a little bit different show, but you can see, I think, the embers that became the Options Insider Radio Network. So don't hold it against us if, shall we say, it wasn't the best way back then. But it got better, I think, at least. And, of course, you can always join us every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. Join in there. Enjoy it. Stream it. Ask your questions. Complain about Tesla puts now being out of the money that were in the money before. All sorts of other stuff I know you guys have on the brain. Have at it. We do like to hear from you guys on occasion, usually most days. All right, and joining me on the old program today, let's see who we got. Let's spin the old option block all-star panel wheel. Starting off with, he's coming back. He's the old meatball from Parts Unknown, a.k.a. Riverside, Illinois, by way of the new Volatility Fund, as well as the Carmen Line, as well as Option Pit. He is the greasy meatball, Mr. Mark Sebastian. Mr. Meatball, welcome back to the show, sir. Congrats on the victory of your Villanova. What is it, the Wildcats?
It is the Wildcats. There were how many different Wildcat teams in the tournament this year? It was unbelievable. I love the school, but they could do better on the mascot name. The mascot is actually named Will D. Cat. So, I thought you'd appreciate that one. I'm actually in beautiful downtown Chicago looking over LaSalle Street, where it's been too long since we had a parade. In fact, the last time Villanova won, the Cubs won. So I'm hopeful that maybe the Cubs will win the World Series this year.
There you go. It's a leading indicator for Cubs victories. Villanova's victories, so far we have a prior history of one for each. So we'll see. That's not exactly the most reliable of data sets, but we'll see what we can do. Also joining us somewhere out of Parts Unknown, but I think we know where they are these days. It's called St. Charles, Illinois, where we are joined by good old Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, how's it going? Are you happy to see all this green back on the screen, sir?
Oh, for sure. I am happier than a wild D cat or a Will D cat.
Oh, wow. You must be real happy.
That's they could do some work on that name. I'll give them that. All right. At least it's not offensive. You don't have to change it. It's just bad. That's offensive for a whole other reason, which we won't get into. Instead, we'll keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block, the portion of the show where we try to break down the mysteries and wonders that are the marketplace. And certainly, mysteries are abounding these days. We sell off hard, vol pops hard, we rally hard, vol comes off. Not quite as hard, but still pretty hard. Just all sorts of mysteries and wonders abound. And we'll get to those. Of course, today, most of the markets, most of the major indices end in the day firmly in the green. Tech-heavy NASDAQ is the laggard on the screen today, only up a mere roughly about 0.7%. S&P a little bit more than that, a little bit about 0.8%. So right about the Goldilocks range. And of course, the old school, the Dow, leading the rally hoe charge up north of 1%. And of course, all that green means VIX cash taking a break right around 1875 or so as we're wrapping things up here on the day. Got as low. Let's see, how low did we get today? And the cash got pretty close, 1867. So closing pretty much close to the lows, which is pretty much what I assumed out there. Not a good day for all those who thought vol was back. At least aggressively. Saw the futures coming in a little bit today too. Of course, green across the board on most of the major names. You got to look far afield, maybe to Uncle Mike's beloved GLD or a few others to really find a note of red on the old screen. Of course, our old friend VXX showing a little bit of red today because those futures coming back in, if ever so slightly, today out there. So a lot of fun stuff to sink our teeth into. Let's start in Meatball Land. Because he hasn't been on in a while, and he's still celebrating post Villanova. He and Wild E Cat. I saw the pictures. You guys are out running amok on Russian Division a few nights back. But that said, hopefully you recovered and market recovered today. What caught your eye in today's massive recovery, sir?
Yeah, another day. The 2-day turnaround of the S&P is just spectacular. I can't remember the last time. We'd seen a lot of turnarounds. So here's what's kind of different. We'd seen a lot of turnarounds where the market's up on the day and then they tank it. When was the last time where we saw the market really, really, really down and then they bought it? And that was what we saw yesterday and we saw carry through today. To me, that's a sign that, hey, maybe we're, heading for some, some semblance of near data recovery, and the whole panic around the trade war may be displaced for a little bit. Now, obviously, we still have non-farm payrolls that could drive things tomorrow, but definitely felt like a different tone today.
Yeah, you're right, because ostensibly everyone's kind of been waiting for that other shoe to drop, which is China to really charge in there and match us kind of blow for blow in the trade war, and they pretty much did that this week. So that ostensibly is what a lot of people who were that's the worst thing people were dreading out there in terms of finally seeing a little bit of this. I mean, we've been talking trade war for forever, but you haven't really seen it out there. Now China says they're going to match us. That's kind of the worst case scenario, quote unquote, and yet we saw it. The market took it. We sold off pretty aggressively, and then you're right. Within a session or so, they started buying it again, and today they're buying it hard. So maybe this trade war thing is overblown. Uncle Mike, you've kind of been no-selling this trade war thing kind of from the beginning. You thought it was a little bit of silliness, overblown. Everyone was getting so worried about it. Do you feel, vindicated, justified going into today's rally, sir?
I mean, not necessarily today, but I really feel that with what's happened with the trade war, I think it's more of a perception type of thing, and that there's the fear that we're going to have a lot of bad things happening. With the tariffs that are going on right now for steel, I still don't think that itself was a very big deal, but what it's led to is what has caused the panic. Now, with what's happened, I'm just looking at a 2-day chart of the SPX, the low 2573, the high 2672, and then of course with the closing today at 2662. That is a 99-point move from the low to the high over the course of roughly 26 hours. And so when there was the announcement that China was going to do the tariffs, and then we had the fear that was happening overnight, going into the market, yesterday, it was definitely pretty concerning. But then I just remember thinking that we were at similar levels as to where we were in early February when we had the lows. So I really felt that with where we were at the open yesterday, it was going to be an interesting test because with us being below the 200-day moving average and us being around, we could have a nice little pop in terms of where the market would go. So with that, I mean, I did do a few things, which I'll talk about today in the strategy block. There's the hook that I always try and do in days like today.
Excellent hook. That was the hook. Hook of the year, Mike. Hook of the year.
I love the hook. I love the hook. But with what we have going on right now, I agree with Mark in that the one thing that's also out there that could still play a factor in the marketplace is the non-farm tomorrow. If you look at today's, just looking at it right now, we had 5 points of gain open to the close today on the S&P, and it's up 18 points. So 13 of the 18 points came from a gap. And so for the most part, if you looked at just a chart of the day itself today, we're going rather sideways. So it did come from, we were a little bit higher during the day. We had the highs, of course, maybe 10:30 today, Chicago time, and then we came close to those highs again a little bit after 2 o'clock Chicago time. We were relatively flat in the market. I shouldn't say flat. We were channeling throughout the day today. Tomorrow, interesting in that we actually have a scheduled macro announcement that is not going to be something that we're expecting. So we're actually expecting something that could be big news tomorrow. We don't know what it's going to be, of course, but it's going to be interesting to see how the market will react to expected big news.
Yeah, Mike, I would think that, if we're in a normal range or the news is actually good, we could be really rally. If watch that wage growth number, that's the landmine that we keep seeing in non-farm payroll. So that's maybe the only area where I would be slightly nervous about kind of how things could move.
Well, and here's the other thing. And I agree with you, Mark. And the other thing to add to that, the SPX is still technically negative on the year. We're down. Let's see, we opened the year January dividends. You might be able to make a case that if you actually held the specific stocks, we're about even. But the point is that we're still technically negative on SPX on the year. And I think that if we do go above the open of the year, which would be 2683, that could be like a mental resistance in some way, shape, or form. And if we can break above that, we could be off again like we were in January.
All right, we're going to get Uncle Mike sorted out here. I think the two people using the internet in St. Charles are fighting with each other, so we'll get him sorted out. So you can hear all of his words, hopefully in time for the old strategy block in a little bit, where we have to hear him loudly and clear. Speaking of hearing loudly and clearly, we heard you guys loud and clear on a bunch of names today that you guys have been trading up a storm. We know you guys love your Teslas, and apparently the market does today as well. Up 18, nearly 19 handles, or a whopping 6.5%. And we heard from a lot of you who got stopped out or stopped yourselves out, had good risk management, or maybe not good, but or you would have had a spread or something, but at the very least had risk management in terms of stopping yourself out on the old puts there when things got wonky, got down to 250, 244, I think Tesla hit. And then, of course, here we are back. We heard from a lot of you today who said, oh, man, if I had just waited, my puts would have been out of the money again. All would have been good. All would have been right with the world. In some cases, the broker didn't let you. We get it. It was an involuntary close, but still, that's kind of the worst kind of pain when you get stopped out and then it immediately retraces. So we feel your pain here on the show, all you out there who were size Tesla put sellers, and we know you're floating around out there. Also saw Facebook in rally ho mode again today, up nearly 3%, a little over 4 handles out there today. So in the last in the last session and today, so in the last two sessions, it's pretty much had close to about an 11 handle range. I think it got down to 150.5 yesterday, and today got as high as 161. So 11 handle range just in the last two sessions for Facebook, which is just madness. A lot of push and pull out there. He's going to testify. They're making changes, all these other things, kicking Russian firms off the platform. All sorts of things going on in Facebook land, trying to right the wrong. I don't know, Mr. Meatball, are the crazies in the pit chat, they sling a lot of Facebook or Tesla over there these days?
Yeah, I mean, Tesla, well, we'll get more. We get to talk about our puts here in a little bit. But yes, Tesla and Facebook both actively trading. We were looking actually at some longer term stuff. So using this kind of pop to build some longer term options that, could potentially you can ride this mess, because, it's a PR problem, right? It's not like Facebook broke. It's a bad PR issue that they've got, and eventually PR things get worked out. Look what happened with Equifax. It rallied. It hit a bottom and then went almost straight up. And Facebook will probably do the same thing. Tesla, at some point Elon Musk will be allowed to stop. They'll make him stop lying. However, apparently that is not right now, because they bought it. We're going to get our production targets. We won't need to borrow money. All right, well, buy the stock. I don't believe them. They're going to need to borrow money. But you know how I think that, some interesting trading here in both of those names.
Speaking of interesting trading, it was an interesting month here for options trading in general. In March, we had the numbers come out earlier this week from our friends over at the Options Clearing Corp, the OCC. As you might imagine, Q1 in general was pretty good from an options volume perspective. Vol comes roaring back to life. Things like that are bound to happen. It was the highest first quarter volume, and highest first quarter for equity options ever in history. So good stuff out of there. Overall year-to-date volume, March volume overall, first off, 443 million contracts. That's up 15% from March of last year. Year-to-date volume is up 32% from this period last year. Last year we were just coming off the heels of the inauguration. We were beginning the long, slow decline of VIX, which a lot of people were thinking was going to spell doom for the rest of the year. So bit of an apples to oranges comparison last year to this year, where now we're in rock'em sock'em robots, trade war, everything else war kind of mode here. The year-to-date volume up 32%. So we're talking about 1.4 billion with the B cleared contracts versus a little over $1 billion this time last year at the end of through the first quarter. Overall, listed options, that's where we want to play. 434 million contracts in March, up 16%. Drilling down a little bit farther, equity options, 384 million contracts, that's up 17% as well from March of last year. Drill down a little bit more, cleared ETF options, 181.5 million contracts, that's up 15% from March of last year. Index options up only a mere 10% with about 49.5 million contracts. Cleared futures also looking pretty good, 8.9 million contracts. That's surprising though. It's actually down 28% from March of last year, which is surprising because they actually have an additional contract now. They used to be just VIX. Now they have VIX, which did well as Bitcoin futures. So I'm not sure why that number is down so much. Maybe I'll have to ask our friends over there. Maybe that's a misprint. But either way, that is surprising. I would have thought VIX futures did pretty well in Q1, but apparently they were doing pretty well maybe in Q1 of 2017 as well. Either way, from March of 2017. Either way, interesting stuff, and there's more on the way. Let's get to it, including those mystery puts in Tesla Mr. Meatball alluded to, because it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, it is time for the Odd Block, the portion of the show where we break down the head-scratching weird paper that's been lighting up our tape. We've been talking a lot about, it doesn't get more head-scratching than these crazy, funky Tesla puts. As we mentioned on last shows of the last week or so, ever since that Reuters article came out about these puts as well, we've seen renewed interest, renewed life in these things. They've been trading up a storm. These things traded, especially our initial ones and ones we initially focused on about a year ago, these Jan 2019 50 puts in Tesla. These things have been trading up just madness. You want to see just pure movements in price based on very little. These puts are the place to go. We see things are trading almost $3 just a few sessions ago. They got up 289, 290, somewhere in that range. They're more than $1 less than that now, with $1.65 at $1.77 is how these puts went out today. Even still, there's about 45,000 open on these strikes. So the scary thing is, these things have been trading up a storm over the last week. The people were opening at prices around $2.90, $3, close. I don't think I ever hit 3, but close to it. So yeah, there's a lot of people perhaps wearing it right now out here in these puts. Another 3,500 going up today. So these puts are just the gift that keep on giving for us here on the show, even if people who are coming in, diving in at the north of $2 range are probably going to be a wee bit disappointed in how that plays out for them. Also saw some action here on the par puts, a mere 917 going up out there today. So still 24,000 open out there. Not a lot of play yet on the March 2019. No one really seems too interested in those. Instead, they're all going out to play in Jan 2020. So Jan's where the action is. Jan 2019, Jan 2020, March 2019. Nobody seems to care yet. The Jan puts go down to the 20 handle. So if you want to get really deep, that's where you can go. But the 50 puts in Jan, the Jan 2020 50 puts, trading 500 more today, about 10,600 going on over the past, just open on this strike. Another 350 going up on the Jan 2020 par puts as well. So a lot of action in these. Mark, I'm sure you saw just the Reuters article about these and just the explosion of interest that's happened ever since. It seems like people collectively awakened to these little garbage puts, which we were talking about them not that long ago. They were 30, 40 cents. And then they got up to almost $3. I mean, it's just insanity. I'm sure you loaded up on a ton for Carmen Line, did you not?
Oh yeah, we owned it, all of them. That's actually been us the whole time buying those.
I knew it. I knew you were snickering through the camera.
Yeah, and then there is, Tesla's debt is junk grade bonds. This is probably bondholders protecting themselves. Pretty nutty. And the fact that they're finally getting some attention is laughable.
It is fun. It does go to show, too, that how rich those CDS premiums are, that you could sell those things and afford to buy these puts, even at lofty valuations, and still probably be laughing all the way to the bank on these things. Either way, though, crazy things have happened. Speaking of crazy things, we outlined on Monday's show, listeners, some crazy calls going up here in GameStop, ticker symbol GME. This one closing today, 13.5. If it sounds like an auspicious level, that's because it is. We'll get to that in a minute. Ticker symbol, of course, GME. This is a name that's doing about 12,000 contracts and change these days, doing over 20,000 today. If you recall back on Monday's show, we broke down, I think it was about 18,000 of the weekly, so expiring tomorrow, April 6th, 12 calls going up, just a slew of them in big chunks, 500, 600, 1,000 at a clip. Started buying them at $1.05, bid them up all the way to $1.25, kind of just planted a size bid there for $1.25 and sat there until they got filled. Total of about 18,000 trading on the day. The net change in the OI was only about 12,000, so maybe a little intraday scalping going on there. But these things looked pretty ugly at first. When we started talking about them on Monday, they were marked somewhere 30 to 40 cents against them. They were 80-odd cent bid, so 85-cent bid when they paid $1.25. So they were looking kind of ugly for a little bit, but this guy, we said this guy needed something to happen and needed it to happen this week. And so far, he's been right, actually, in terms of the underlying eventually getting where he needed it to be. He paid $1.25 for the 12-strike call, so he needed to get to 13.25, obviously, and he's there now. He got up to actually closing today, 13.5, got as high as 13 63, hit 13.5 yesterday as well. So he's been at that level for the last couple of sessions, which is probably why we're seeing a little bit of taking some off the table today. About 3,600 of these April 12 calls in the weeklies went up today. A lot of them sales around prices ranging from $1.50 to $1.60. Not all of them. Looks like a lot of sales going up there. So whoever put these on took off. Looks like probably at least a couple of thousand today. There's still, like I said, 10,000 open on this strike, a little bit north of that, and 3,600 going up today. So even if they were all closing, there's still a lot more, about 6,000 and change left to go here on this strike. So we talked about it. We said it looked like someone needed something or expected something to happen, and apparently that was the case. And it's funny because the stock has shrugged off since we talked about it on Monday. It shrugged off multiple downgrades since then. It doesn't really seem to matter. You know, bad news has come out since on this name, and yet it's all kind of worked out. GameSpot back to where he needs it to be. Mark, I know this is your favorite name, GameStop. You go there to buy all your fun tchotchkes and whatnot. But yeah, we saw someone piling into these weekly calls, and at least for the third or so that he's taken off, it seems like it worked out for him.
Yeah, all my amiibos I get there.
Everybody loves amiibos. Well, I don't know what the hell they do.
Amiibos.
They're just cool.
Yeah, no, at some point this is going to look interesting as a buy. I mean, they still have the used game business. They have other pieces. The vol is really cheap on the in the name right now. So that's the other thing, is the guy was buying really relatively inexpensive premium after it got drubbed on earnings. So, this is interesting. We get a little more lower in vol, and I'm going to start getting real interested in these. And I may join this guy in his trade. Just need a little more lower, but I like his setup. I do.
You like I'm guessing you're not going to play in the weeklies though. I'm just going to go out on a limb.
No, probably not. I'll probably go a little further out. Give it a little time.
What would it? I'm curious. What would it take to? I mean, obviously some big impending announcement, but outside of that, what would it take to make you play in effectively a weekly, straight up out of the money call like this guy?
Ooh, you really have to plan on being right. And, sometimes there's some really inexpensive shots. Maybe things got a little – the guy basically after earnings said, hey, this is a little overdone. I want to play this for kind of the rip bounce. And he got it.
So those ones where – and maybe the CEO whispered in my ear and said it's going to move this week. And somehow it was public so that it wouldn't be material, non-public information, but it hadn't been impacted in the stock. That's a good scenario where I would do that. But outside of that magical, mythical scenario, I don't see a lot of time where I'm just gobbling up weekly near-term upside, especially for – this guy paid a boatload for him, $1.25. That's a lot of money, 18,000 times. It's a lot of money to have just go away if you are not correct in the timing of that. All right, moving on to another one. Speaking of someone who was not correct in their timing, this one looks painful. Let's see. I don't have the prices where he put them on, but we'll look for that in a minute. This is going up in talking about Energy Transfer Partners LP, ticker symbol ETP. So an appropriate ticker. This one closing 1675, up a little bit more than 2% in today's action. This is a name that also does, again, these are fairly robust names, more than we usually talk about here in the odd block. Usually talk about names that do 300 contracts. This one doing nearly 13,000 a day. Today doing 48,000 and change. 47,000 in the calls, 800 some odd in the puts. So not a lot of love for the puts. 54-1 calls over puts. And of that, a lot of the action may come even away from your typical options chains. You may come across this one and say, wait, what's going on? I have to dig a little bit because this name, like I said, closed at 1675, but 21,000 of today's 40-odd thousand contracts going up today came in the Jan 2019 45.55. Yes, you heard that right. 45.55 call vertical went up 10,500 times. Looks like paper pretty much giving up the ghost on this bad boy, selling it out for pretty much 2 cents, trying to get whatever bid they can left on this strike, because there is size OI here on both of these strikes. I don't have the exact date when this spread went up, but it seems like someone had perhaps a loftier view for ETP and has decided now that, you know what, that ain't going to happen at least anytime soon. And that's why, I mean, looking back here, we're going back all the way here now. Let's go back. Well, this chart only goes back here to May of last year, so not quite a full year here. But still, we see even back then, looking at the chart here, got as high as about 23 and a half or so. Almost 24, never quite broke 24. So still very far away from this 45, 55 vertical, which is, these are interesting strikes. And then it's kind of never really looked back since. It's flirted with 20 a few times, got back up to 20 again as recently as the end of January when a lot of stocks peaked. Then it's kind of been on a downward trajectory ever since. So it seems like whoever put this on, and again, I haven't had a chance to go dig in and see exactly when all this OI opened, because it obviously went up a while ago. But that said, they decided today that they could take what they can get, take their what was it, 2 cents 10,500 times, and get the hell out of Dodge and just get it off their books. I don't know, Mr. Meatball, you have to, as a fund manager, you must emphasize with this guy, maybe not in his direction, but just the pain of finally coming in and just getting what you can left on a fairly sizable position that is obviously clearly. Now, this guy still got some time on it. At this point, if you had this on, would you take it off or would you just let it ride for 2 cents?
Just let it ride. I don't know. Maybe he didn't have it. Maybe this guy didn't have it on, and he or maybe he unwound the whole position. You know, maybe this is a hedge against a short, and now that he's got the short off, he just doesn't want to deal with it. I have no idea. So that's my feeling.
I don't know, Uncle Mike, are you there, sir? Have you fixed your internet? If so, if you had a crazy vertical like this, what is that? 30 handles out of the money, and it's down to 2 cents. Would you even bother? Would you let it? It's like a lottery ticket at that point, is it not?
Yeah, I think that. Well, I'll give you an example. Right now, I have a lottery ticket that I got pretty much for free about a month ago in the SPY that I talked about on the show. How I legged into those spreads for a zero basis, pretty much, and I'm still sitting on them for 2 weeks. So I would say there comes a point to where if you think that the odds are better in it, I would stay in it. So that's where I would be with it. I'd stay in it.
Yeah, at that point, it's already decayed so much in your face. You still have a lot of time. You have till Jan of next year. Who knows what could happen with these funky names like this? But yeah, at the end of the day, yeah, you've already kind of had the damage done to you. But still, so all you out there who are feeling bad right now, maybe you missed a bounce in a name, or you got stopped out in another name, and you watched it retrace. And all of you I know who are probably feeling some pain right now. You're not the only ones out there. People are putting on size trades that are not working all the time. So just a little bit of hopefully a little bit of a comfort to perhaps the misery if you're out there. If you're so afflicted, maybe we can help you out again. So let's see this last one here. This is Array Biopharma Inc. Ticker symbol ARRY, ARRY. Closing today, $15.30, off about 65 cents or a little over 4%. This is a name that does about a little bit shy of 3,000 contracts a day. Today, doing a little bit more than 2x that, about 6,630, almost 31 to 1 calls over puts. If you scroll down in your chains, listeners, you'll see it come out pretty quick. It was the June 18s that were lighting it up to the tune of 5,300, about 5,000 of them going up in one massive block here for $1. So pretty much right off the offer. It looks like someone gobbling up some of these bad boys, again doing it 5,000 times over there on the Philly. No open interest to speak of, only 132,000 contracts open. 132 contracts open there. So clearly all open in paper. And let's go back and see. We love these little biotechs. They love to do crazy things like shoot up. It looks like that's kind of what this one has done. It traded about $9 about exactly a year ago, kind of vacillated in that range, got down to about 7.5 or so, actually 7.15 back in August. And then ever since then, earnings came out a little bit after that. It's kind of slowly been shooting up, got up to nearly $19 just, about a week ago, actually about a month ago. And ever since then, it's kind of been drifting back down to a little bit less lofty levels of a mere 15.5. So someone coming in saying, you know what, I like what's been going on in this name of late. I'm going to buy myself some time. I'm going to spend $1 to go out the 18 strike all the way till June. And again, it was north of 18 not that long ago, about a month ago. So that's not perhaps as outlandish as it may seem. Straight up out of the money call buy in a biotech. Mark, we've never seen that before in the odd block. This is new paper for us. What say you about this upside call love here in Array Biopharma Inc?
Well, someone seems to think that Array Biopharma Inc. might have some upside around a drug or something like that. That'd be my bet.
It's amazing analysis, sir. You went out on a limb on that one. Really taking a risk for the team. I appreciate it, sir. Yes, someone's got some love. Someone's got some call love in a go figure. Call love in a biotech. Oh, it's a script we've never seen played out before. This time we'll see. We'll see if our friend here is going on. Let's test out his connection one more time before we go to the old strategy block. Mr. Uncle Mike, I know you're more of a strategic night guy, not so much with the biotechs, but what say you about this crazy call love in biotech, sir?
Well, I love biotechs. They're actually my all-time favorite sector in the entire market because that's where when people do a bad trade on biotechs, I was against them. That's when they typically call me. They're a great source of new business for me. So I love biotechs.
You know what we love, though? It's Thursday. It means we love the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block, the portion of the show where Uncle Mike gets up with some options, wit, wisdom, education, perhaps some analysis, perhaps some hilarity, perhaps you'll learn something, maybe all of the above. Let's see if we got him here, listeners. We're just trying to firm up his connection. We're going to the old school route. We're going to call him on the old phone. So let's see if we've got him here. Uncle Mike, are you there, sir?
I am here. Can you hear me?
We can hear you. A little bit. Phone connection's better than nothing at all, right? So we'll go for that.
Absolutely. So anyway, what I want to talk about today is selling a spread versus buying a spread, and when I like to do them and why I like to do them. Now, I talked a little bit ago about how much I love the biotechs because after a failed biotech trade, for whatever reason, that's when people like to call me. And so that's been a great driver of new business for me throughout the years I've been at this. So I would encourage everybody with that logic, I'd encourage everybody to sell as many out of the money spreads as you possibly can in biotechs. And but on a serious note, why do you sell a spread? Why do you buy a spread? Well, the first thing I want to talk about is selling a put spread on the S&P. This is something that I do. It's something that I talk about a lot, but I had someone talk to me. Actually had a client ask me. He's actually a listener to the show. He might be listening right now for all I know. But I had him ask me about selling a put spread on the S&P. And isn't that a disadvantage to do that? Because theoretically, or a lot of times, the volatility on the leg that you buy is greater than the volatility on the leg that you sell. And the reason for that is for the skew that exists within the S&P, because a lot of times large money likes to buy further out of the money puts as the catastrophe puts, and that's what drives up prices of further out of the money puts. And so, yes, it is at first, but I contend that it can also be to your advantage if it goes against you. Here's what I mean by that. Let's say that the market goes down significantly like it did the last couple of weeks. I want to go through some of the trades with which I had on. I was actually short the 270, 265 put spread on SPY. It hit 270. My rule on put spreads is don't get your face ripped in is rule number one, and rule number two is don't forget rule number one. If you abide by those two rules, then you'll do okay selling spreads, selling short spreads. I think that's just my personal opinion on it. You may not make a ton of money, but so long as you don't get your face ripped in, you're going to be okay. So my rule is that I like to not let them go in the money. And usually I like to sell them in such a way to where when it gets to the point where it's touching the short strike, I'm not losing more than the initial credit I'm trying to receive. So at that stage, I got out and I rolled down to the 265, 260. Then I ended up rolling down to the 260, 255, and eventually I ended up rolling down just to the 245, 240, just from everything going down as much as it has, because I felt that the premium was very generous at the 245, 240, which I got out of for a profit yesterday. So with all that rigmarole, and then I ended up getting into the 255, 250 yesterday. So, and this is all for April. So let's say that I do absolutely nothing and the markets stay the same between now and April expiration. Well, that means that the S&P will have lost SPY will have lost roughly $10, and I will have lost roughly $1 on all these spreads. I can make that up in a month, and that's something that I think is very wise to do in terms of avoiding getting your face ripped in. And full disclosure, actually, I'm sorry, I misspoke. I am in the 255, 250 for May now. I did go out to May. So my point is that how are you able to actually have the S&P lose as much as it has and have me lose not near that much? Well, two reasons. The first reason is the two rules that I talked about not getting your face ripped in. But the second reason is that as the markets go lower, volatility theoretically goes higher. So that option that you bought that was against you at first because of the fact that it's a higher vol is actually helping you when the market goes lower. Reason being is that let's say that volatility is going higher. Fear is becoming greater in the marketplace. And at that stage, people are saying, oh no, I need to hedge myself. I can't be unhedged anymore. So I need to buy some more of these puts. With that being said, the value of those puts that you're buying is helping you during that time. Now, does that happen all the time? Does it happen during one-day options or weeklies or whatever? That's a whole nother strategy block. But my point is that the thing that can initially hurt you with selling a spread ultimately can turn to help you, as it did for me this week, over the course of these last couple of weeks. So I would encourage you to really have that in mind, or have those rules in mind when you're selling a put spread on the S&P or an index. The same would hold true with like the Qs, with RUT or things like that as well. So with that being said, the concept of selling a put spread, or selling a short call spread for that matter, is that you're looking to get income. And I like this market right now for selling spreads because volatility is higher and you can have a lot more cushion, so to speak, when doing so. If we had a VIX at 10 or at 8 or whatever it was a few months ago, I wouldn't want anything to do with selling a spread. Reason being is that to get the same type of credit that I'm getting now, you're going to have to go way closer to the money. And it's just not worth the risk, quite frankly. So that's why in a market like that, I think that it makes more sense to either do a diagonal of some sort, or possibly just even buying long calls like I did a couple months ago. So where I want to go with it today is that if you are a premium seller, meaning you like to sell spreads, two things to remember. The first thing to remember is the two rules of selling short spreads. Rule number 1, don't get your face ripped in. Rule number 2, don't forget rule number 1. And then the second thing to remember is that the thing that can work against you when selling an index put spread ultimately can help you if it goes against you. And that is the strategy block for today, live from my cell phone.
There you go. Hey, it held up, so that's good. I like that. Rule number 1: don't get your face ripped off. I think that should go for too much anything you do in life. Is number 1: don't get your face ripped off. You know, you're feeding meat to lions. Don't get your face ripped off. They're selling puts in SPY. Don't get your face ripped. Good words to live by, sir.
It's hard to argue with those.
It is hard to argue with those as well. Sometimes, I emphasize, sometimes it's hard to argue with you guys as well. Let's see if we can do it anyway, because it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block, the portion of the show where you guys take the reins. Questions, comments, insights, all of that good stuff. And so, yes, the big palooza, the big hullabaloo. You know, of course, March Madness is over, and our options broker madness is also in the record books. What a tourney it was this year, listeners. A lot of newcomers actually joining the fight for the first time, which was kind of interesting. You know, the options brokerage space has really had a lot of upheaval over the last year or so. Firms buying other firms, large groups acquiring people, other firms going by the wayside, all sorts of crazy stuff happening. But still, there were enough names out there and players to populate a field of 16, including some newcomers. And there were some surprising results here this year. First off, Robinhood did surprisingly well. A lot of people didn't expect them to be in the tournament, but a lot of you guys requested it. After all, they're not fully really into options yet. I think you have to go request it. It's in beta. That said, those of you who have been using it like it, and you guys voted accordingly. So Robinhood did surprisingly well. They made it into the battle. They actually made it into all the way to the Final Four for our showdown there. And then also we saw last year's winner, Lightspeed, doing really well, getting all the way to second place. But it wasn't enough for our winner, which was another newcomer to the old event this year, which is Tastyworks, a newcomer to the network. They put up a great fight. Actually, that final battle was kind of interesting. It was a tale of two audiences, I suppose you could say, with Lightspeed really doing well, sweeping the Facebook poll, and then the Tasty folks really active on Twitter, sweeping the Twitter poll. Of course, we have boats, other places, Instagram, email, carrier pigeon, website feedback, all that fun stuff has been tabulated. The votes were counted, and Tasty is the winner. They are getting the Hall of Champions. So we'll bring somebody on, maybe Tom or some of the other folks from the team over there, to come on and chat about their victory, see what it is they're doing that clearly is resonating with a lot of people out there. And a lot of you guys are saying, that's great, but who wins the fabulous prizes? Well, I'll have you know, listeners, the names are being drawn from a hat as we speak. So they're being filtered to me as we go. So here we are. Number 3, the winner of the exclusive, very exclusive Options Insider Lands End Gear. Only the people out there who have this are some people on my team and some of the people who contribute to the network, and a bunch of, shall we say, some of the heads of the big exchanges and brokerage firms is out there who always request free shirts. So you get to join a pretty exclusive club, and that person is Array, at Romans Ray over there on Twitter for that one. Remember, you got entered every time you voted, every time you liked, every time you shared, every time you pretty much emailed in a suggestion, every time you interacted with this in some way. It was essentially you were entered another ticket in the old hat there to win. So every time you played along, you got entered to win. We tabulated all that up. Nice random drawing. Number 2, the winner of the Amazon gift card goes to Bobby Matos. I don't know the handle there. That one's coming in from Facebook, I believe. So, Bobby, congratulations to you. And the number 1 winner who wins the nice Echo speaker from the Echo Dot speaker from Amazon out there. You get to join the Smart Speaker Club. I love them. We have them all over the place here. Don't worry about the listening. It's just Amazon. What are they going to do with it, right? Just sell your data to Whole Foods, maybe. But that said, the winner of the Echo Dot speaker is Divinity Bank. Divinity Bonk, maybe. I'm not sure, with a C there, over there on Twitter as well. So congrats to all of you. Thanks to everybody who played. We had votes all over the place. It makes our team's job to calculate all that a really big pain in the butt, but it's worth it because it's fun. And I hope you guys had fun. If you guys like this tournament, I know you guys do. If you have ideas for other ones you'd like to see us do, people have suggested exchanges. But, because they would fit, there's about 15 of them. We have to maybe make up one to make 16. But that said, most of them are kind of owned by large exchange groups. So, voting for one of the 6 NASDAQ entities, I don't know if that's as fun or as sexy as fighting for or against your favorite broker out there. But if you have ideas, maybe we could pit some other things. Maybe, I don't know, big names, trading names. I don't know. If we do that, all the FANG names are going to kind of just run to the top. But I don't know. Maybe you have ideas for what you'd like to see us face off next. Because it's kind of fun. We kind of like it. You guys clearly like it. My staff hates it because they have to tabulate all of your votes, but I like it, and you guys clearly like it too. So congrats to the winners. Again, that was Romans Ray for the exclusive gear, Bobby Matos for the Amazon gift card, and Divinity Bonk for the Echo Dot speaker. So we'll reach out to you via the appropriate platforms. We'll get your mailing addresses, and in the case of the gear winner, your sizes. and we'll get some stuff out to you in the next couple of weeks. So stay tuned to your mailbox for that. Let's see. Let's go to some of the mailbox here and see what you guys have on the brain, by the way. Let's go first one here from Jilian. This is kind of a common refrain we're hearing. She says, the whole inverse volatility thing has me spooked about other inverse ETFs like SQQQ, which is 3x short a NASDAQ 100. You got UVXY and SDX, 2x short S&P. Should I be worried about these can be wiped out next? So first off, you got UVXY in there. Maybe you typed that mistakenly. That doesn't belong in there. But SDX, you got levered. These are levered too. So you're talking about it entirely different. Remember, our other friends out there, XIV and others, they weren't levered. They were just inverse. So you're talking about kind of a different beast. Mark, this is a question we used to get a lot anyway. But now in the wake of the whole, SVXY, XIV kind of implosion, we're getting a lot more, particularly about the levered inverse stuff. Are you concerned about these names maybe going the way of the dodo? No, they do too much volume. People like them too much. We had one group that did not. They wanted to get rid of XIV, but all the other stuff's going to stick around. I don't think any of these are going to disappear. Oh, a resounding no. Let's see if we can get perhaps a contrary opinion from Uncle Mike, sir. Are you in the same camp, or you think these things are going the way of the dodo tomorrow, sir?
No, because people like them, and that's why. I remember having, when I was at Options Express, probably 12, 13 years ago, someone was saying how great they loved the inverse, some inverse S&P fund. Market was going down. They're like, I've made a ton of money off these. I think in the education department, you guys should start really promoting these. And he didn't have anything to do with the trading or anything. He just happened to be a marketing guy. And so I'm like, no, we don't really want to promote those because if anything, you can do better with, we feel that it's more efficient to do futures. And then I kind of went through these things that we've talked about on the show a million times. And then his response was, I think you're wrong because I've made a lot of money on these. No, because you could do put options. You could do, went through more real factual evidence. And his response was, I think you're crazy because I've made a lot of money on these. And I think people see things like that and they don't want to learn about more efficient ways of being inverse or levered or things like that by using derivatives. And they just want to make a lot of money on things and not think. And then, you have a problem like you had roughly a month ago.
Problem indeed. You're right. Everyone liked XIV and SVXY, though, right up until the point where they were no more, or at the very least were in, shall we say, a pale shadow of their former selves. But it sounds like we got a lot of votes there for now. I'm going to lump in that camp as well. And I'm not really overly concerned. I mean, some of these crazy levered ones, you always got to kind of keep an eye on how they're constructed. But these ones have been around for a little bit. They've seen a little bit of a test of time. They're not some of these esoteric, illiquid, super funky ratio levered things that could probably go the way of the dodo. That said, we've seen issuer panic risks, so I don't think anything has a zero delta of going away anymore. Maybe more like maybe some of the crazy big ones. But outside of that, nothing would surprise me anymore. But I'm not too overly concerned about these. Speaking of concern, let's see what I'm concerned about coming up the rest of the week into the weekend, because it is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, you heard the man. This is the portion of the show where we tell you what we're watching, keep an eye on, maybe concerned or excited about for the rest of the week into the old weekend. We'll start with you, Uncle Mike, sir. What is on your radar for the rest of the week?
7:30 a.m. Chicago time, non-farm payrolls coming out. As always, I'll be looking to see how the market reacts to that, pre-market, of course, and see how everything goes throughout the day tomorrow. I think that's the biggest thing on the radar right now, and I would advise everyone to be careful this weekend because I do sense a bit of complacency in the marketplace, and if something bad does happen, it wouldn't surprise me if it happens this weekend. Not that I know of anything by any means, but seems to be a habit of bad things happening when markets aren't trading, and we have one of those situations coming up. Be careful, folks. Make sure you're hedged in the right way, or can handle the risk you have on already.
There you go.
That was cryptic.
Yeah. Or perhaps
that was really cryptic.
You call a guy like
bananas.
Uncle Mike. Let him roll your puts for you. Mr. Meatball. Aside from cryptic warnings, what are you keeping an eye on, sir?
Yeah, no, I'm gonna be watching what Mike Tosaw's up to. It sounds like he's planning something evil. Non-farms is gonna drive everything, and then we'll see where we go from there. If non-farms come in line and things aren't too hot, we could have a pretty nice turnaround and a pretty decent vol drop. We are lining up for that.
All right. Unfortunately, we're also lining up here for the tail end of the show. That music means we've come to the end of yet another epic journey through the world of options. Talking everyone's favorite or perhaps least favorite names these days. Facebook, Tesla, crazy puts, the indices, volatility, VIX, all the fun stuff, some inverse products, all the volume going up in Q1 for options. Spoiler, it was a good quarter, as well as all the other stuff on your guys' radar, including our victors and indeed our prize winners in the great March Madness tourney of 2018. Thanks again to everybody who played. We love doing this. It's fun. It's a labor of love. It truly is a labor. Not so much for me, but for everybody else who works there. So I just have fun with it. But that said, we do love doing it for you guys. So keep playing, keep enjoying. If you have ideas for other ones you'd like to see, hit us up. Maybe we'll entertain them. You never know. So keep an eye out for those and hit us up if you have ideas. But before we go, let's go back around the horn. Let's start in the other direction. Let's start with the greasiest of meatballs. I think he's eating a meatball sub right now. That would be very appropriate. Mr. Meatball, if I'm liking what you're talking here, maybe I want to look at some volatility, or maybe perhaps I want to take a webinar about this thing called the VIX. Where should I go? What should I do? Yeah, just go to optionpit.com /weeklies. We're doing our special Saturday class on trading weekly options. It's going to be Saturday from 9:30 Eastern time till we're done, which will be 1:30ish, maybe 2. You know how Andrew likes to talk, so it could be a while. But go to optionpit.com /weeklies to sign up. It is 50% off to view live, or you can buy it in the tank recorded for double that price. I don't know about you. I prefer live for less than double and in the tank. Yes, definitely. Double in the tank. Unless it's a double-sized lobster perhaps in the tank, and you're going to pluck it out for a nice, juicy, delicious dinner, which, of course, I'm sure the Rock Lobster perhaps is doing right now as we speak. And before we go, Mr. Uncle Mike, let's say I'm that guy out there who's concerned about this cryptic event you've alluded to over the weekend, and I'm saying, oh, my God, I'm panicking. Uncle Mike's really scared me. But I don't know how to buy these put things, or perhaps I don't want to. I want someone else to roll my puts for me. Where should I go? What should I do, sir?
Well, first off, I'd say there's plenty of reason to panic, and now's when I say, oh, no, and hang up quickly. No, just kidding. Give me a call, folks, 312-212-3531. Ultimately, I'm a bull, but I am a cautious bull. Or feel free to send me an email at mtosaw@rcmfs.com. And for any new clients, as always, I will throw in a $100 gift card to the Option Pit to use in any way with which you would like. So reach out to me, folks.
Can I use it? I can just have a Skype call with Mark Sebastian and just berate him for a full hour. Can I do that?
I think that's going to cost more than $100.
Cost more than $100, at least $150 to do that. But if that's your bag, listeners, hit up Uncle Mike M Tosaw at RCMFS, and you too can join that put rolling party, and you too can be hedged for whatever crazy cryptic event Uncle Mike is alluding to. We shall see. On behalf of the Meatball, and indeed Uncle Mike, and of course myself, I want to thank all of you out there for downloading, streaming, subscribing, all the fun stuff that you do. Of course, for playing along in our broker madness. That was really fun. I'm glad you guys enjoyed it, because we certainly enjoyed doing it. And we'll see you back here next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.